Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I'm going to discuss about ledger and trial balance, under which we are going to take an illustration. We prepare the ledger and we extract the trial balance from it. Don't forget, in my last video, I discussed about ledger, the meaning of ledger, the various types of ledger that we have, and how to identify a debit transaction and a credit transaction. So let's get started. A ledger. A ledger can simply be defined as the principal book of account in which all the financial records are kept. So it is the final destination of financial transaction. So while a trial balance can simply be defined as the list of all the debit and credit balances in the ledger, including the cash book. Though if you remember, if we prepare a ledger at the end of the period, we are going to have balance. If it is a debit balance, it will move to the trial balance. If it is a credit balance, it will be moved to the trial balance. So a trial balance can also be defined as a test of arithmetic accuracy of the financial transaction. Before we go further, let's look at the format of a trial balance. So in a trial balance, we have three columns. The first column is for the entries, while the second column is the debit side, where all the items that have a debit balance will appear, while the credit side contains the list of the items that has a credit balances. Now let's take an illustration. So Abiodun started a boutique business with cash amount of 100,000 naira on 1st of January 2021. The following are the other transactions made by the business. On January 3rd, purchased of 5 pairs of jeans at 5,000 naira per jean. On January 8th, cash sales 10,000 naira. January 10th, paid electricity cash 2,000 naira. On January 14th, purchased 7 pairs of jeans at 6,000 naira per jean from Johnson on credit. On January 17th, Abiodun withdrew 20,000 naira to pay his house rent. On 19th, credit sales of 10,000 naira to Ola. January 23rd, pay cash of 25,000 naira to Johnson. January 25th, cash sales 15,000 naira. On 29th of January, received 7,000 naira cash from Ola. On 31st of January, paid salaries 12,000 naira. You are required to prepare the ledger account of Abiodun and extract the trial balance for the month of January 2021. So let's get started. Starting with the first entry, Abiodun started a boutique business with cash amount of 100,000 naira. In this transaction, like I explained in my ledger, I said the first thing is to identify the two accounts that will be involved, that is the giver and the receiving account. So in this transaction, this is a cash transaction, which means we are going to have a cash account. The other account we are having here, this is talking about the money used to start business. That is capital. It is called capital, which means we are going to have cash account and capital account. Since we are receiving cash, it means cash account will be debited while the capital account will be credited. That's the treatment. So which means we are going to open the ledger for cash account. So ledger number 1, we have cash account. So like I said, cash account will be debited with capital 100,000 naira. That is on the 1st of January, capital 100,000 naira. The corresponding credit entry will go to the capital account. We don't have capital accounts. That is, we open the second ledger, ledger number 2, capital account. So we are going to credit capital account with 100,000 naira. That is cash 100,000 naira. That complete the transaction complete the entry for the first transaction. Now the next transaction, January 3, purchased of 5 pairs of jeans at 5,000 naira per jeans. That is, January 3 purchased 5 pairs of jeans at 5,000 naira per jeans. Identify the two accounts. If a jeans is cost 5,000 naira, so 5 jeans is going to be 5,000 naira times 5, which is 25,000 naira. So what are the two accounts that are involved in this transaction? This is a cash transaction. It means we are going to have cash account, while the other account is going to be what? Purchases account. So the cash is going out this time around, which means we are crediting cash account while we are debiting purchases account. Those are the two accounts involved. Now let's go to our ledger. We already have cash account. We are not going to open another cash account. So which means our cash account, we are going to credit the cash account with purchases 25,000 naira. Why the corresponding debit entry goes to the purchases account? We don't have purchase account, so which means we are going to open a ledger for purchase account. That is going to be ledger number 3, purchases account. So this time around, so we are debiting the purchases account with what? Cash, 25,000 naira. So that completes the double entry for the second transaction. Let's move on to the next transaction. On January 8th, cash sales 10,000 naira. So if we identify the two accounts, we have cash account because he is selling in cash, which means we are receiving money. Cash account will be debited, and we have sales account, which is going to be credited. So that is cash account debit, then we credit sales account with 10,000 naira. So just like I said, we already have ledger for cash account. We are not going to open another ledger. We go to the cash account, we debit it with 10,000 naira. That is on the 8th of January, sales 10,000 naira. While the corresponding credit entry goes to the sales account. We don't have sales account yet. That means we are going to open a ledger for sales account, and that will be ledger number 4. So sales account. So we are going to credit sales account with cash, 10,000 naira. So that completes the double entry principle for that transaction. Then the next transaction, that is on January 10th, paid electricity in cash, 2,000 naira. Electricity is an expenses. It means money is going out. So which means cash is going out, cash account will be credited, while the electricity account will be debited. That is credit cash account 2,000 naira, debit electricity account 2,000 naira. Now we are going to go into ledger. We already have ledger for cash account, so which means we are going to credit cash account with electricity 2,000 naira. We don't have electricity account, so which means we are going to open another ledger for electricity, which is ledger number 5, electricity account. So the corresponding credit entry, debit entry goes to the electricity account. That is, we are debiting electricity account with 2,000 naira. Now the next transaction on January 14th, purchase 7 pairs of jeans at 6,000 naira per jeans from Johnson on credit. If we look at this one, the business is not receiving money. They are not paying money. They are purchasing on credit, which means they are owing. That means we are going to have a creditor's account. And who is our creditor this time around? That is Johnson, which means we are going to have Johnson account as a creditor while we have purchases account. So the Johnson account, who is a creditor, will be credited, while the corresponding debit entry goes to the purchases account. That is Johnson's account, credit 42,000 naira, purchases account, debit 42,000 naira. Now let's go to the ledger. If we look at it, we don't have Johnson's account, we don't have creditor's account, which means we are going to open a ledger for creditor, which is Johnson. That is going to be ledger number 6. We have Johnson's account. So just like I said, Johnson is a creditor. We are going to credit Johnson's account with 42,000 naira. While corresponding debit entry goes to the what? To the purchases account. We already have purchases account, so there's no need of open another account again. So we debit purchases account with Johnson 42,000 naira. So that complete the double entry system for the transaction. Then the next transaction, which is on January 17th, Abiodun withdrew 20,000 naira to pay his house rent. If we look at this one, the money being withdrawn from the business was used for personal use by Abiodun. So any money used for personal use is called drawing in account. It will not be part of the expenses of the business because of an entity which says a separate entity. That is, there is difference between the owner of the business and the business, which means there is going to be an account for that. We open a drawing account for the transaction. So in this case, this is a cash transaction. Cash is going out. We are going to credit the cash with 20,000 naira, while we debit drawings account with 20,000 naira. That is credit cash 20,000 naira, debit drawing account 20,000 naira. We already have cash account, if you remember. So we are going to credit the cash account with drawing 20,000 naira. That is on January 17th, drawing 20,000 naira. The corresponding debit entry goes to the drawings account. We don't have drawing account yet, so that means we are going to open a ledger for drawing, and that is going to be ledger number 7, drawing account. So the corresponding debit entry will come to the drawings account. So that means January 19 with debit drawings account 20,000 naira. So that completes the double entry principle for that. Then the next transaction, which is January 19, credit sales to Ola 10,000 naira. This time around, this is a credit sales. It means Ola is a debtor. Ola is owing us. So that means we are going to open a debtor's account with the name Ola and debit the account, while the credit entry goes to the sales account. The two accounts involved are Ola account, which is going to be debited with 10,000 naira, and the sales account, which is going to be credited with 10,000 naira. Now, we don't have ledger for Ola account, so that means we are going to open a ledger for Ola, and we stop at ledger number 7, which means Ola account is going to be ledger number 8. That is ledger number 8, Ola's account. Ola is a debtor. Just like I said, we are going to debit Ola's account with 10,000 naira. That is January 19 sales 10,000 naira. That completes the double entry principle for that transaction. So the next entry, which is on January 23, paid cash of 25,000 naira to Johnson. Pay cash of 25,000 naira to Johnson. If you remember, Johnson is a creditor. The business is owing Johnson. So this time around, the business is paying money to Johnson's account, which means cash is going out. We are going to credit cash account with 25,000 naira, while Johnson, which is creditor's account, will be debited with 25,000 naira. That is credit cash account 25,000 naira, debit Johnson's account 25,000 naira. If you remember, we already have cash accounts, so we are not going to open another account. So we only credit cash account with Johnson 25,000 naira, while we go to the creditor's account, who is Johnson, and debit Johnson's account with 25,000 naira. That is Johnson, which is ledger number 6. We are going to debit Johnson's account with 25,000 naira to complete the double entry principle for that transaction. Then the next one, which is January 25, cash sales 15,000 naira. So the two accounts involved are cash account, which will be debited, while and sales account which will be credited. That is debit cash account 15,000 naira, credit sales account 15,000 naira. So we already have cash account, so there's no need of opening another account, which is ledger number 1. So we are going to debit the account with 15,000, and that is January 25 sales 15,000 naira. The corresponding entry goes to the sales account, which is ledger number 4. Then we credit sales account 15,000 naira to complete the double entry principle. So on January 29 2021, received 7,000 naira cash from Ola. Remember, Ola is a debtor. This time around, we are receiving money from Ola. So which means cash, we receive cash, we are going to debit cash account and credit Ola account. That is, receive 7,000 naira cash from Ola. We are going to debit cash account 7,000 naira. Then we credit Ola's account 7,000 naira. So we go to our ledger, which is the ledger number 1, which is cash, which is ledger number 1, which is cash account. So we are going to debit it with Ola 7,000 naira, where the corresponding credit entry goes to the Ola's account. So Ola's account, which is ledger number 8, we are going to credit that account with 7,000 naira to complete the double entry principle for that. So the last entry, which is January 31st, paid salary 12,000 naira. So the payment is in cash, which means we are going to have cash account. It's an expenses, money is going out. We are going to credit cash account with 12,000 naira, while we debit salaries account with 12,000 naira. So credit cash account 12,000 naira, debit salary account 12,000 naira. So we already have cash account, so we are going to credit it 31st of January, salaries 12,000 naira. So we don't have ledger for salaries, so which means we are going to create ledger for salary, and that is going to be ledger number 9, salaries account. So we are going to debit the salaries account with 12,000 naira to complete the double entry principle for that. If you look at it, that is the last items we are having, and we are required to do what? To draw the ledger and extract the trial balance. We are done with the posting of the entry into the ledger. So just like we have to do to prepare the ledger and extract the trial balance, then the next thing is to balance the account, that is balancing the ledger. So if we look at the ledger, we are starting from the first ledger, which is ledger number 1, which is cash account. So if we had all the debit sides together, it's going to be 132,000 naira. If we had all the credit sides together, it's going to be 84,000 naira. Which one is bigger? That is 132,000 naira. So that means we close the account. After closing the account, so the one that is bigger, we write it at the total side, 132,000 naira, 132,000 naira. If you remember, the credit side is not up to 132,000 naira, it is 84,000 naira. If we subtract 84,000 naira from 132,000 naira, so it's going to remain 48,000 naira. So that 48,000 naira will be called balance carried down. The balance carried down of 48,000 naira will be brought down to the debit side of the account as balance brought down 48,000 naira. What this means is that at the end of the period, after deducting all the expenses, so the business is having 48,000 naira left with them. It is this balance that will be transferred to the trial balance. So this is our trial balance. So we are going to transfer it to the trial balance, that is cash, which is ledger number 1, 48,000, which is a debit transaction. It will appear on the debit side, 48,000 naira. Now let's move on to the next ledger. So the next ledger, which is ledger number 2, is capital account. So capital is a credit transaction. We have 100,000 at the credit side, we have nothing at the debit side. So let's close the account. If we close the account, the 100,000 that we are having will be written at the total of the two accounts. So at the debit side, we don't have anything there, so we are going to have balance carried down, which is 100,000 at that debit side. Then the balance carried down of 100,000 will be brought down to the credit side of the capital account as 100,000, which means at the end of the period, the total capital of the business still remain 100,000 naira. It is that 100,000 naira that will be transferred to the trial balance as a credit entry. That is capital, which is ledger number 2, 100,000 naira. Then the next ledger, which is purchases account. In our purchases account, if we had the debit sides together, we are going to have 67,000 naira. So let's close the account. If we close the account, we have nothing at the credit side, so we write the 67,000 naira at the total of the two accounts. The credit side, we don't have anything. That means we are going to have our balance carried down to be 67,000 naira at that side, while the balance brought down will be 67,000 naira, which means for the month of the January, the total purchases is 67,000 naira, and it is this balance that will be transferred to the trial balance, that is purchases, which is the third one. It is a debit balance, so it's going to appear at the debit side, 67,000 naira. Then the next ledger, which is ledger number 4, which is sales account. So if we had all the entries we are having at the credit side of the sales account, it's going to give us 35,000 naira. So let's close the account. So the 35,000 naira will appear at the total of the two sides. At the debit side, we have nothing, so which means our balance carried down is going to be 35,000 naira, while the balance brought down will be a credit balance of 35,000 naira. It is this balance that will be transferred to our trial balance as a credit balance, that is sales, which is ledger number 4, 35,000 naira. Then the next entry, which is ledger number 5, which is electricity. So we have just a transaction, which is 2,000 naira. Let's close the account. If we close the account, so we write the 2,000 naira at the total of the two sides. So at the debit side is going to be balance carried down 2,000 naira. Then we bring the balance to the debit side as balance brought down 2,000, which means our electricity, the balance is 2,000, which will be transferred to the ledger, that is electricity, ledger number 5, 2,000 naira. Then the next ledger, which is ledger number 6, where we have Johnson, a creditor's account. The debit side is 25,000 naira, the credit side is 25,000 naira. The credit side is more than the debit side. So which means if we close the account, the one that is bigger is what will appear at the two sides, which means we are going to have 42,000 naira. The debit side is not up to 42,000 naira. So if we subtract 25,000 naira from 42,000 naira, so we are going to have balance of 17,000. That 17,000 is going to be balance carry down 17,000, and the 17,000 will be balance brought down 17,000, which means at the end of the January, the amount left by the business to pay Mr. Johnson is 17,000 naira. So it is this balance that will be transferred to the trial balance, that is creditors. Johnson, 17,000 naira. The next entry, which is ledger number 7, we have drawing account. We have just one transaction. Let's close the account. If we close the account, so the 20,000 will appear at the two sides. So the credit side, where we have nothing, it will be balance carried down 20,000. While we bring the 20,000 to the other debit side as the balance brought down, which means in the month of the January, the total amount withdrawn by the owner of the business for personal use is 20,000 naira. It is this 20,000 naira that will be transferred to the trial balance as drawings. Ledger number 7, 20,000 naira. Then the next entry, which is ledger number 8, Ola account, who is a debtor. So at the debit side we have 10,000 naira, at the credit side we have 7,000 naira. If we look at it, 10,000 naira is the bigger, so it is the 10,000 naira that will appear at the total of the two sides. We have 10,000 naira, 10,000 naira. The credit side is not up to 10,000. How much remain to make it 10,000 naira? That is 3,000 naira. That 3,000 naira will be balance carried down at that side, 3,000 naira, and the balance will be brought down to the debit side as 3,000. Which means at the end of the January, the total amount left for Ola to balance the business is 3,000 naira. It is this balance that will be transferred to the trial balance, that is creditors. Ola 3,000 naira. Why the last transaction, which is ledger number 9, we have salaries account. Let's close the account. If we close the account, so we are going to have 12,000 naira at the total of the two sides. It will be balance carried down 12,000 naira at the credit side, and the balance will be brought down 12,000 naira at the debit side. It is this amount that will be transferred to the trial balance as salaries, which is ledger number 9, 12,000 naira. So that is all about the posting of all the entries. So if we had 48,000 naira plus 67,000 naira plus 2,000 naira plus 20,000 naira plus 3,000 and the 12,000 naira, the total will be 152,000 naira. 100,000 plus 35,000 plus 17,000, that will also give us 152,000 naira, which means our account is balanced. If the two sides are not balanced, that means there are some errors that cause the disagreement. You can check out my videos where I discuss about errors that affect the agreement of a trial balance. In some cases, the account will balance, yet there will be some errors. So you can also check out my videos where I discuss about correction of errors in a trial balance, which is errors that do not affect the agreement of a trial balance. So this will expand your understanding about this account. So don't forget to subscribe to my channel, like the video, and share it with others. You can visit the site that appear on the screen for more understanding about this topic. Until the next video where we'll be meeting, I said bye for now.